morning, everyone. Swing Pony and Pax here. Welcome to Capital Preservation Friday on the Place Your Trades Network. We're the network that focuses on trading daily options using the CME Group's event contracts to get access to the indexes, energy, metals markets, and now Bitcoin. We have an awesome show ahead. The market finally broke out. I mean, it's been, I feel like a broken record. I'm like range bound, range bound, range bound. We finally had the breakout. It was amazing. So Pax and I are going to be discussing that. We're going to get a little bit into what's on the agenda today. It's a big day for the market in terms of the schedule and potential volatility. We're going to talk about the breakout. We're going to talk about the levels that we're looking at next. The importance of not trying to outsmart the market because, you see a lot of traders, it's like we've got the breakout and they're like, okay, I'm ready to short it. We discuss waiting until the trend changes until you make those decisions. And then we're also going to get into some event contracts and what we're looking at for today, just a way to get some skin in the game with a little less exposure because we had a beautiful trend day yesterday, potentially volatile day today. So we'll see how it goes. This broadcast is brought to you by Tradeovate. They're the ones who've created the custom app that we all use to trade these event contracts. You can either trade them on your phone, the very simple yes, no on where you think the market will close, or you can trade them on the main platform using the Dome. All right, Pax, how are you doing?
I'm all right. How are you, Swing Pony?
I'm good. It's Capital Preservation Friday.
It is.
I think, what we discuss on Fridays is more important today than ever, really. Just taking a look at what we have on the schedule. So yesterday, long anticipated breakout, it finally happened. It was beautiful. I mean, those green candles were just one after another after another. But headed into today, first of all, it's OPEX, which is known to be potentially tricky price action for a lot of people. So OPEX is a tricky day in general. It's the day after a trend day, which can also be tricky. And we have Jerome Powell speaking at 11 Eastern. So, I'm anticipating a little bit of volatility. What are you thinking?
OPEX, even quad witching has always been a big letdown to me. I don't care. But it doesn't affect the indices one way or the other, at least in my mind. Today's Fed speakers and Powell speaking is going to be important. Just an hour and a half after the market opens, and the market will be holding on to his every word. I would be surprised if he talks the market down in any way. I think that everybody kind of is long-term bearish, both the economy and the markets, but we're not going lower anytime soon. And I've been tweeting about that and talking about that over and over and over again. We're stuck in this range, and the range has been tradable. From the opening range standpoint, we've had really good intraday trades. Nobody's going to get rich in a range bound market, but you can really make some pretty good money just being consistent. And to me, that's what trading is. The majority of my career has been that back and forth, have been trading in that back and forth, in those back and forth sort of ranges. I think that a lot of you younger traders that have come in, and younger, I mean traders that have started post, during COVID and post-COVID, you guys have gotten too used to volatility. Trading is more over a long period of time. What the last couple of months, excuse me, I'm not feeling so hot today. What the last couple of months have been like, just back and forth, back and forth. So capital preservation is most important in that in those times, because we need to survive, we need to thrive and make money, and we need to survive in those days to get to days like yesterday. Mm-hmm. And telling the market where it's going to go or predicting where the market is going to go is not something that I do. Not on a daily, not on a weekly, not on a monthly, not on a 5-minute or a 1-minute chart. I don't even look at. I don't look at 5-minute charts or 1-minute charts. But standing in front of a possible running freight train and saying, that's it, you're not going any higher. This is the top. This is the top. I can't. I've tweeted about this. I cannot. The number of traders, the messages that I've got from on DMs and Twitter and in my Twitter feed from traders that have blown up, trading the Nasdaq, especially the last couple of weeks, is sadly disappointingly high. And I think that now that the S&P is finally following through, like the Nasdaq had a major breakout above the 100-week moving average at 13,000. Now, somebody pointed out on Twitter the Nasdaq has been rallying since early March, and that's true, but or it has led. But the Nasdaq had another leg breakout on the upside above 13,460. That's the 100-week moving average, 13,460. That price in the S&P is 4203. To give you a snapshot of how weak the Russell is, the 100-week moving average in the Russell is 1974. So 13,460 equals 4203 equals 1974. So you got the S&P now finally breaking out. You got the S&P finally breaking out above the 100-week moving average yesterday at 4203.05, and then above the quarterly high, which was 4206, and then above the yearly high, which was 4208. So now we've got at least I've got a major upside target now of 43.24. As long as we get our second close above 41.87, the target you and I talked about yesterday, a couple of every day in the chat and everything else. As long as we get two closes above 41.87, that targets another whole leg up to 43.24 through 42.24. The prices specifically 42.24 up to 42.65 to 42.92 to 43.24. That's where the S&P wants to go.
So we'll pull up the chart and look at that here in a moment. But 41.87, you kept mentioning that level, and my game plan this week was I'm not really going to trade. This range has been it's been a patience game, right? I've traded this range before throughout the last year. Every time I've been stuck in it, it's chopped me up. So I said, you know what? I'm going to be patient. If something happens, I'll trade it. I managed to trade it yesterday. It was amazing. I traded it the day before. But, like you said, we're in a very interesting place where we finally get the breakout and people are immediately talking about their plan to short the market. There is this instinct to constantly try to outsmart the market, to try to get one step ahead of it. And if anything, I actually would think that maybe this sort of excruciating range we've been in has been a humbling experience for a lot of traders. Because like you said,
passport to poverty.
Passport to poverty. Oh. I mean, there's so many of us trying to, get that daily volatility, to get that daily move and forcing trades. And this is about playing the long game. And I've learned the hard way. I've lost so much money in this range before that I was like, I'm gonna take it easy this time. And I've had conversations with you. I've had conversations with Crudele, where you guys have said, we've been doing this for years. This is not abnormal. Mm-hmm. You guys were spoiled. And so a lot of day traders constantly think, all right, gotta keep trading it every day. Gotta plan what's happening next. So yeah, I think the key is to try not to outsmart the market. There is an inherent desire to want to predict what it will do next, but I think you can sort of predict through preparation instead. Like you do. If we hit this level, this is what comes next. If we break this, I'm going to go short. So let's go ahead and pull up the chart for the S&P. All right, so I've plugged in all of your levels. One thing I do want to note that I've been keeping. What was that?
It's a lot of levels.
That is a lot of levels. So one thing I want to point out on the daily time frame, I've been noticing a lot of these sort of expanding megaphone patterns, both on a larger time frame and on a shorter time frame. So we had another one here that was, nesting on a shorter time frame, but we're kind of reaching, the upper trend line here. So I'll be curious to see if we can blast through that, if we can get some momentum. Like we mentioned, Powell speaking at 11 Eastern. And that's where we're, listening to every word and seeing how each candlestick reacts. But that's really where I would anticipate, if we are going to get a major move, that it could happen there. But just looking at sort of the levels that you have mapped out, let's go on a smaller.
What price is that?
So it's about 42. It lines up with about your 42.27 spot.
Okay.
So after that, we've got 42.33, 42.35. Then you're looking around 42.50. What is your game plan today? You're going to wait until the opening range?
I'm always going to be, I'm always going to wait for the opening range. Talking about predicting markets and making calls. I don't do that. I trade the market. Like I was trying to say, I trade the market from a live standpoint. I use real-time trading information to make real-time trading decisions. So when the opening range sets, instead of telling the market where it's going to go, I'm just going to go with it. So if the opening range is, we're trading at 42.20 something. If the opening range is 42.23 to 25, I'll be long above 43.25. 43.24 is a target for me, so I want to be long above that, short below it anyway. If the opening range coincides with it, then I'll be long. Ultimately, I'm going to target 42.65, but I want to see that the market work through 35. I want to see the market work through 55, and then it'll 51.50, and then that'll target up to 65. So on the levels that you've got, not all of them are going to be targets. Like 43.35 will be the first target. So I'll be long coming out of the opening range. I'll pay for my trade and I'll take profit at 35. We get above 35, then that means that we're going to the next intraday target, which would be 42.50, and I'll take profit there. And we get above that, I'll add again. Because we get up to 42.65, I'm going to take most of my unit off at that price, and above 42.65, then I'll update targets. But it's like kind of like that chart right there looks. It's one. What time frame is that?
So this is the hourly that I've got pulled up right now.
So on the hourly, it looks like ladder rungs when you spread it out, and that's how I see the market moving. From one rung to the next rung, sometimes back and forth, like this range that we've had, and then another rung to the next rung, to the next rung, to the next rung, to the next rung.
So you take profits level by level, right?
And then I look to add to my positions when we get above it. So treating my targets like kind of another version of the opening range. I'm long above it and short below. I'm not going to be short below it, but adding to my positions above it. As long as we're above the opening range, trading above the opening range, I'm trading the market from the long side. I'm not going to, when we get up to 42.65, I might flatten my longs. I'm not going to flatten, but I might, I'm not going to, I wouldn't reverse there. I is what I'm saying. I'm not a good reversal trader either. I've never been a good reversal trader. Somebody was asking me, we got down to 41.13 the other day, and that's been a target for, I mean, I think everybody had that price in the S&P, and they reversed. One of the traders in my group had reversed there and asked me if I was reversing there. And I said, no, I'm not a good reversal trader. I wasn't on the trading floor, and I'm not on the screens. If we're below the opening range, I want to trade it from the short side in stages. I'll take profit, take profit, take profit. 41.13 holds, and I still have one or two left for my original unit. As the market, rallies above that, I'm going to peel off for profit as the market continues forward. But I'm not going to, and I'll add underneath it, but I'm not going to reverse at it. I'm not going to reverse at 42.65. To me, that's picking tops and picking bottoms. And I know a lot of traders who have made a lot of money trying to pick tops and trying to pick bottoms, but inevitably they all go broke. So I want to trade the price action, as it is at the moment, not as I think or want it to be, and not trade my opinions or my bias. I want to trade the market as it is and leave my bias at the door. And of course, like everybody else, I've got a bias. If we open up this morning, I'm bullish. I've made no secret about that on Twitter. I think I've been saying it for the last couple of months. I've been saying it since December, since January, since March. Expiration, the opening range for the year, and since March, we are going higher. We're going to at least 43.24, and I think ultimately the S&P target's 44.09 before we go lower. But if we open up below the opening range today, I'll get out of my longs and I'll get short and I'll take profit at 41.87. And if we get below 41.87, I'll be really short.
I love your trading style because it's objective and it takes out some of the, inherent biases that we bring onto the market. I want to say I don't do it, but I do. Internally, I have something that I think will play out, and sometimes that can affect how I trade. But when you have objective levels, a plan above, a plan below, that's really helpful. I want to get into some event contracts for today because here's how I feel about the market. After a massive trend day, a lot of us probably, if you were on the right side of the trade, probably had a really great day, trading the S&P, trading the rest of the market. What I've noticed is sometimes after a massive trend day, we can have a bit of a choppy price action. And for me, those are some of the best days to play these event contracts because, first of all, if I've had a nice day, the next day, sometimes I can give it back. We've all been there. We get a little bit of that euphoria going into the next day. We want to keep the momentum going. So we'll continue to trade. We'll use big size. We'll want to recreate what happened the day before. And that's how we get annihilated, essentially. So for me, event contracts on a day like today, where we had a great trend day yesterday, it's options expiration day. Jerome Powell is taking the stage at 11 Eastern, and who knows what will happen. Because that's like our Super Bowl. Anytime he's talking, it's like it could get volatile. Event contracts allow me to get some skin in the game without being overexposed. So when I trade these, one of the first things that I do is I actually head over to the Place Your Trades dashboard. That's just www.placeyourtrades.com. You click here, you go to the dashboard, and I go and I look at our quant stats. So these are also emailed out every morning as a gap and go leaderboard. Essentially, it's a way to play the market based on the direction that it gaps. So looking at today's quant stats, some days there's a very strong discernible edge. Some days the percentages are really strong and it feels like, okay, I can use this. It can give me some form of edge. Other days where it's a bit unclear, like today, I didn't notice any particularly strong stats based on where we could potentially open. So it doesn't give me a huge edge today, but there are some days, like there were 2 days this week where the stats were really, really strong and we had beautiful, beautiful uptrend. So definitely the first area that I consult with. Then
that day, I think it had a really high probability in the Russell and the S&P to rally.
It was about 61%. The day before yesterday, it was about 61%. And then we had good stats yesterday too. And it's just like, these are just probabilities based on historical data. Nothing is a holy grail, but to be able to take that as just one more edge and one more indicator into how the potential outlook for the day could be, it's been super helpful for me.
Well, Thursday, we came out of the opening range to the downside. Even though I'm bullish, I was short. And as we came back up through the opening range to the upside, I took profit down. I made money on the short side. We came out of the opening range to the upside. I knew the quant stats were leaning towards the long side. So I increased my size on that long. I'm still long those, that opening range breakout from Thursday.
Wow, amazing.
Strong, so it was just something I think all of you younger traders call it confluence. I never heard that word. And
I love that word.
I never heard of it. I don't know what the fuck it means. Oh, excuse me. I don't know what it means.
When everything aligns and It's just like,
I know
like you've got the support. You feel like, it just feels like stronger confirmation.
I mean, I know what it means. But I don't, anyway. So when I saw that, and we were talking about it in the chat, and I thought, oh, look at that. I look for equal distance swings. What the market did on the downside, the market will do on the upside in equal measure and in equal form on the way up above that. So, the quant stats gave me a little bit extra confidence in my long side position. So, and if you guys haven't gone to the Place Your Trades dashboard yet, it's really, really awesome. There's so much great information, not just for trading, but for event contracts. We've got the dome, we've got price history, we've got charts. there's volume, so much, and I'm still getting used to it. My I'm not an options trader, and my brain doesn't work quite like that. But there's just so much information on there that I'm learning so much from.
So what PAX is referring to, guys, if you go to the dashboard and you scroll all the way down, we've got some awesome tools from QuickStrike. They haven't loaded in yet because they'll all become available once the market opens, but I highly suggest you start your morning checking this out because it gives you a really great outlook on, relative strength across the different sectors. It'll show you how each market is trading. You'll get a really nice chart that puts into perspective what your potential risk is, what your potential profit is with all of these event contracts. So you can sort of look and also see where the volume is, what are the hot strikes for today, where is my risk reward the best. And I want to go ahead and pull up the Tradeovate platform and show you guys sort of where we're at. I got a little trigger happy last night and I put some bids in for the 4230 calls. I figure, you know what? I'm going to set some bids in. I put some in at 5. I put some in at 550, some in at 6. And so I've already got a little position built. So I have 6 of them at about 575. If these close in the money, each contract that I bought for that price is essentially going to close out at the end of the day for $20.
You can sell them for profit.
What was that?
You can sell them now for a profit, not
I
not
could.
but you can make money on them now. They're trading at 9.25.
I could. I actually, what I want to do, my game plan for today, I think, is when Jerome Powell starts to speak, there's usually some volatility, right? Before, after, during. I think that's a great time to put in some bids. If there is something that I want to get a cheaper fill on, I can put some bids. If I get filled, I get filled. It could potentially be at a great price. Pax, what strikes are you looking at? What would you be interested in?
I like the cheaper ones, so 42.40 and 42.5. If we get up above the opening range today, I think we'll have range expansion. Again, I think the Nasdaq kind of sits and lets the S&P play catch up. So 13. Just to give a snapshot, 13.7 in the Nasdaq, 13,740 equals 43.24. Those were the highs. Those were the highs in August in the market before they broke like crazy. And they were also the 200-day moving average and the 100-week moving average. Anyway, so if the S&P gets above the opening range and starts to go, I think the Nasdaq can it's going to hold its strength. I don't think it's going to break. But I want to be long, and the 42.30s are a little bit expensive right now, but 42.40s are cheap and 42.5s are very cheap. So I would expect that the market is going to, especially with Powell talking, we can see those levels. On the downside, 42 evens are also cheap. So with Powell talking, the nose at 42 even, I would take those and maybe the 42.90s. And because again, like you were saying, on a Powell day, when the market has been waiting for another market driver, Powell's speech is going to be a market driver.
It will be. It's Super Powell Friday. That's what I like to call it.
Super Powell Friday. Yeah, very good. That's good.
I mean, it's amazing that we finally had the breakout, and then the icing on the cake is Jerome Powell will be joining us. I'm like, there's got to be fireworks. I mean, usually when he speaks, it's sort of like you want to create like a little bingo card and see what words he hits. And, sometimes it benefits the bulls, sometimes it benefits the bears, sometimes it goes both directions. So I think the key here is to remember potential volatility, right? And so
I think the market is pricing in positive comments, and also pricing in a positive resolution to the debt ceiling crisis. And this is another reason why we're seeing range expansion. But if Powell's got anything negative to say about the market, lower for longer, or any of those things, then we can really start to tail off again. So I'll be short from the opening range, and I'll have some no's in my pocket that I can trade out of too.
Yeah, and that's the thing here. Like when you look at the 4,200 no's, for example, those are a steal right now. If I get that at $3, let's say you're long in your main portfolio, right? You've got a lot more capital tied up and going long, and you're like, I probably need a little bit of a hedge. If you get, I don't know, 10 of these, that's going to cost $30. And if they happen to close in the money, it'll be, like, I can't even math right now. That's going to be what, $200, right? So the risk reward is very, very nice, whether you want to use it as a hedge, whether you just want to have some skin in the game on a day where the market's potentially volatile. You're like, I don't want anything to do with that. I don't want to get caught in that, but I want to participate in some way. This is a great way to do that, and that's why I like utilizing them.
Me too.
All right, well,
Two.
Let's see what the market brings for us today. It was really, really refreshing. I gotta say, I'm not much of an emotional trader at all, but there was some sense of relief in finally getting that breakout yesterday. I think, the key is just to play the market day by day, level by level, not to get too ahead of yourself. And just, like we talked about earlier, not trying to outsmart the market, because as Pax says, with his Paxisms, that's a paycheck to poverty, and nobody wants that.
If you missed it, if you missed this move too, and if you're trading for it and you missed it, who cares? There'll be plenty of other ones. Don't chase it, and don't try to create something out of nothing. I was talking about that yesterday on the Spaces, but don't. I've lost more money chasing missed opportunity and chasing lost money than I have anything else than I've ever had. I've lost more money doing that than I have been being wrong in the market. But when you have a really good day like yesterday, and we have range expansion, I think that capital preservation is going to be important. Somebody tweeted the other day about having their first $10,000 day, and I retweeted it. My point to him was, take it easy, like you're doing today. Cut your size and just take it easy today. Let the market do what the market is going to do, and don't fight it. Yeah. Similarly, if you missed it, don't chase it.
Anytime I know for me, if I get like a sort of stirred up feeling inside, I think we all have cues and indicators in our body that tell us, like, I feel like I'm missing out. I feel like I want to chase a trade. I feel like I want to make something happen. The best thing you can do in those moments is usually not walk to your computer, but walk in the opposite direction, because, our bodies are giving us this cue. And I think if you make note and truly acknowledge what you're going through as you lead into these decisions that have potentially been very costly for you, that have been emotional decisions, you can sort of cut that trigger. You can be aware that this is about to turn into a bad decision for me. I'm going to nip it in the bud here. But yeah, I think there's always going to be more rallies. There's always going to be more opportunities to play. I mean, the market is, what do we have, Pax? Like 250 trading days a year?
Yeah, something like that, 250 something.
Yeah, think about every other day you'll get to trade. You're not missing out on anything.
True that.
All right, everyone. Happy Capital Preservation Friday. Let's see where this opening range takes us, and good luck trading out there.
Thank you, everybody. Thank you, Sheb. It's always great talking to you. I didn't, sorry for the way I sound. I really don't feel all that well. So hopefully next week I'll have a little bit more personality, a lot more to say.
You're awesome. Hope you feel better, Pax.
Thank you, everybody. Have a great weekend.